Let me get back to GameStop, currently up about, 85% at $170 a share. Webull's CEO, Anthony Denier, is with us now. Is the retail investor organizing, obviously on social media? I want to know how powerful this new force is in the marketplace.
Well, as we can see in the prices that are going on in some of these Reddit-type names, extremely powerful. The retail investor only a couple of years ago represented a tiny fraction of the volume in the market. And now the retail investor has taken upwards of 20% of the total volume that trades in the market, and specific names like these more than that. So quite a big force too.
Okay. But what about stocks and companies outside the Reddit brigade? I mean, what I would call ordinary stocks. Do they have any influence there?
Of course they do. They have a lot of influence in not only in the moves that individual stocks take, but in the way that the stocks are talked about on social media. And that influences the company themselves. So the retail investors always had a huge impact, but never have we seen the confluence of financial literacy and social media come together like we've had over the past, several months, in fact, and of course, most famously, the last, couple of weeks.
How would you define the difference between someone of my generation, a baby boomer, and a millennial when it comes to investing? What's the difference between these two generations?
Quite a big difference. The tools that you had when you were starting out on your financial journey are completely different than the tools that today's millennial type investor has. The technology has changed, access to the markets has changed, and most importantly, education on how those markets actually work is completely different. So a typical, as you say, boomer would have given their assets to someone else to manage and pay them a fee. And that was the way it was kind of always done. Like, you guys aren't smart enough. We're the smart ones. We know what's going on. Give us your money. That's completely turned on its head. Now retail investors have all the same information that institutional investors have. They have access to the markets they've never had access before, and they've taken control of that.
But they've also got a lot of spare cash. I mean, we just heard from Denier that you've got $4 or $5 trillion just floating around out there. It's got to go somewhere, and some of it's going into the millennials' pockets and into these stocks. I mean, would this be happening if we didn't have so much cash floating around?
That's hard to speculate, but obviously, with the stimulus, with the stay-at-home economy, people are spending less money on travel and leisure. They have more time on their hands, so a lot more is going into the market. We also have, a Federal Reserve System that has interest rates at nearly zero. So what's the point of putting your money in a savings account or a checking account to bear you zero interest? We wake up every day and we see the stock market making new all-time highs for the last 12 years straight, right? You're missing out on wealth creation. And this new generation says, we're not missing out anymore. And they're getting involved in the market.
How do you put a value on stocks like GameStop, though? I mean, my generation looks at a company and looks at its underlying business. Is there any value there? The current generation, millennials, they seem to look at GameStop and think, well, everybody wants to buy it, so the thing's going up, so I'll invest. How do you establish real value here?
Well, I think everyone kind of agrees that fundamentals have kind of, walked out of this GameStop story. This is more of a trending scenario. I don't see how long this is going to last, but, it's in the news. It's happening now, and momentum is momentum, and you don't fight that.
What do you say to the idea that sooner or later, the little guy, the retail investor, gets left holding the bag and loses? What's your response to that?
Yeah, we hear that a lot, especially in our business. And I think that's kind of short-sighted. What these new retail investors, and we call them new because we just haven't seen this before, is they're getting educated on how the markets work, whether it's talking about T+2 or whether it's talking about fundamentals of a company, whether it's talking about dividend reinvestment programs. These are things that, my generation 10, 15 years ago knew nothing about. And now it's getting learned en masse. So if there is any sort of bubble burst, if there is some sort of crash and people, like you say, do end up holding a bag, they get to walk away with a great education. And we've been doing that in the university system for the last 200 years.
Yeah, you got that right. Anthony Denier, come back soon, please, because you've got a lot to teach me, and I appreciate that. Thanks, Anthony. We'll see you again real soon.
Thank you.